Let's connect with our market expert joining us on the show today from London. Manish Singh is with us, along with personal finance expert PV Subramaniam. He's the CEO of Subramani.com. Subra, first to you. The question on everyone's mind is this. Now that markets have moved up as much as they have, first in anticipation, then on the outcome of the exit polls, now the question is what next? What should I do as an investor? Is the most resonating question that we're getting today. As a personal finance expert, what's your advice?
Look, we have had such a long bull run.
Yes.
Look at your voice. Look at Ansh's voice.
Yes.
They were also hit a new high, right? So everybody is optimistic about the market. It's a fantastic market, perhaps, to sell.
Correct.
We all know what happened today. None of us know what will happen tomorrow. As the results start trickling in, if maybe the market is already discounting 300 or 350 BJP. And so if the market does 360, what will happen? If it does 280, what will happen? One thing very clear, all the pollsters have given the broad indicator that it is Mr. Modi coming back to power. But still, our opposition is saying we can also get 295. I have no clue which is going to be right. So if you are not a trader, it's a great day to sit out and not do anything. But if you have PSU shares, what happens is last time in 2019, the PSU shares went up. But remember, that was on a lower base. For example, BHEL was at 25 rupees, really 25 rupees. Today, it is at 320 rupees. So will it again from 25 rupees? Yes, it did go up. From 325, will it go up? It's anybody's guess, right? So to think that every time, because Mr. Modi also said it in the parliament by Hindustan Aeronautics that it's going to do well, etc. These shares have gone through the roof, right? PSUs have never got such a great PE. Your State Bank of India is touching 1,000 rupees, right? So that kind of price, we've seen it at 150 rupees not very long back. To think that the same thing will happen again, it will continue to go up is difficult. And the smart guys may have already bought put options or they may have sold into the rally today. We have no clue. If you are an investor and you have a 7-8 year view, you could be buying in the market. Yes, maybe market would go up and market could stay there. But if you are not in the market for a long run, and I really mean 7-8 years at least, this could be very slippery time to be in the market.
Watching from the sidelines perhaps is sage advice. Manish Singh, do you agree? From the position that you're at, you're sitting in London looking at the Indian equities and you've watched the markets around the world for a very long time, seeing the kind of trends that build up before an essential day like counting day here in India as well. How do you think you're best placed to tackle the kind of up move that we've seen in recent times in the markets? The FIIs, we've spoken about them in the past, they pulled out of the markets before this rally and perhaps supporting what Subra is saying as well. Do you think the fundamentals are strong enough to kind of take these markets further ahead? What's your opinion?
So again, good afternoon. I do agree with Mr. Subramaniam that it depends upon what sort of investor you are. And with any trade, the key thing is your investment horizon. And that pretty much dictates, your risk reward that you're going to look at. If you are of trader mentality, then it clearly is a point where, like, if we can talk about options, if you were to buy a strangle, you're buying a call and a put, and you believe that there's going to be a volatile outcome either way, then you benefit from it. So that's one trade one can think of. I don't recommend that because I am a more medium-term investor, but again, if you're a trader, then you can put those trades and benefit from that. But if you're really looking at from medium-term point of view, then I do agree that valuation looks rich. Having said that, for the whole of this year, or maybe some point last year as well, the valuations have continued to be expensive if you compare the other markets in the emerging market. So that hasn't changed. But if you're an investor, then you have to take a 3 to 5 year view. What I like is that if Prime Minister Modi wins as it is rumored or the exit poll is talking about, and we can rely only on what we see in the data, then that's just a validation of the political stability, which is a precursor to economic growth. Now, what I think folks should get excited about, and is the third term going to be where you will really see a very radical government, because if you look at the last 2 terms, from manufacturing point of view, there has been nothing radical. I would say it has been disappointing. Services, yes, has caught up. What will this third term bring? Now, I don't know. I don't know any better than you from the announcements so far.
Yes.
But for me, I think that has to come through. If that doesn't come through, then high valuations will not be sustainable.
Right. And that's the key. And Subra, you'd agree with what Manish is saying over here, because if it's more or less a given that Mr. Modi is coming back as Prime Minister, only the number of seats is going to be in play until tomorrow, same time, where we talk in real terms. At this point in time, the other big moving piece is what the 100-day plan is going to be for the next government if Mr. Modi is returning. And that is something that markets are very keen to hear as well. Do you think there is going to be a radical shift from the kind of strategy that Prime Minister Modi has followed in recent times when it comes to spending? Do you think this government is going to think differently? Because there's always this infra push. The government spending has been quite high. Is that likely to continue? Is that going to get a huge bump up? And that's going to be evident in the way the budget is presented. How do you play into what the government, the next government, plans?
One thing very clear is predicting Mr. Modi's moves is impossible. Even within the BJP, people are not able to say what he's going to do. He's the first prime minister who really thought for the bottom of the pyramid, right? So, har ghar mein jal, har jal mein, har nal mein jal, sorry, giving toilets, giving houses and all that. So really to the bottom of the pyramid. If you are in the top 1% of the country, expect to pay higher taxes. There is no escaping that. The country needs money. All this infrastructure is going to pay off after some time. The minute we start getting 5 lakh crores a month on GST, you can expect some reduction in taxes. Right now, I am not very optimistic about how the budget is going to be for the middle class. The middle class has not got anything great from this government, sorry to say, but we all have got fantastic infrastructure. I mean, the roads, the airline connectivity, number of airports, it's fantastic. And all that is definitely going to speak into the economy. So is something dramatic coming in the economy? I doubt it. Will there be more taxation? Will there be higher taxation? Very likely. All this is it going to hurt the small companies which are unable to, which are not in the top, who are now pushed by GST and all that? Yes. So small scale SME is not going to be very happy with what is happening. So you have to have a lot of pluses and minuses. In fact, if you ask me, the market is at its best in terms of all the good things are already discounted. I'm not very optimistic about this being a great budget for the investor or for the middle class. Somewhere it's going to pinch. So be ready for a little bit of pinch. Like I said, if you have a 7-8 year view, I'm not even saying 5-year view, because we are at the high of a bull run, right? Will the market come down? I don't know. But will it go much higher? I don't know at what pace it will go up. Maybe it will go up. I'm not saying it won't. So be a little pessimistic. If you are taking a 10-year view, happily do so. If you're taking a 3-year view, have more in debt and less in equity. Debt market is very exciting, very attractive. I think interest rates will come down as a lot of FII money comes in. Debt market looks as attractive as the equity market today.
Right. True that. Manish, what do you say about this? Because when you look at the kind of outlays that we've had, now there is this huge payout that has gone out from the RBI to the government. It's the dividend payout, and it's the largest check ever written by the RBI to any government in the history of India. So looking at the kind of maneuverability the government will have, when you talk about the fiscal policy, when you look at the RBI and the kind of data that it's sitting on when it comes to inflation, when you compare the possibilities that India has with these two factors favoring them, also oil prices, those seem to be coming down, and that could help the next government in a big way. How are these factors likely to play out for the next government, and if they are going to be the positives, despite the fact that, like Subra is saying, taxation, we haven't moved much. So being able to put more money in the hands of consumers, that remains an ask. But if the domestic consumption story is still to be believed, how are these policies and the maneuverability that the government and the RBI would have likely to play out in the equity markets?
I think it's going to be very vital. I would say that the third term, which is what, when I look at third term, in the first term, you could say that, Prime Minister is trying to get the house in order. Second term, it's a work in progress. But by the time you come to third term, there are really no excuses to drive even more growth and drive even more revenue, because by the third term, you cannot blame anyone else but yourself if things are not going to happen on manufacturing front. And having things moving on manufacturing front will be key, because if you look at any economy that has grown up from being an emerging market economy to a greater economy, they have driven it using manufacturing. You look at Korea, look at Japan, look at China. And on that front, you have not seen a big move. So the steps have been made. And as you pointed out, the infrastructure looks good, the airports, and that helps, because those are the stones that you need on the way, to get to a higher manufacturing economy. But that has to be delivered. And that could be because, there are revenue constraints and we need reform on taxation. I mean, look at something like inheritance tax. We do not have that in India, and there have been talk about that could be introduced. So if the revenue measures are going to grow and that revenue will be used in a productive way, that could be a big part of what you're going to see in third term. But again, as Mr. Subramaniam said, you can't guess what Prime Minister Modi is going to do. Not even his own colleagues are able to guess that. So I would say that I'm really looking at this third term as where Prime Minister Modi really leaves a big stamp on how things are going to work out, because there is really no excuse not to get to in a higher gear, because the market is pricing, or market has priced already, that India is going to deliver on many fronts. So everyone will be looking at where is that going to come from, and if it is coming.
Yes. And which of these stories, Manish, are FII is going to be most convinced about? Because I'm seeing the largest exposure to the financials in recent times. Do you think that's going to continue? Is infrastructure going to get in that much more investments from your foreign investors?
See, I would say that, in a developing economy, the consumer will always be a big part of that. So you will see a good deal of money coming into consumer, and infra, you just can't have enough of it. You have to continue developing that. So there's no reason why it would not come in. That you will have in financials, I would say, in NBFCs, because lending or credit is at heart of an economy. If you cannot get your credit moving, and if you cannot get capital to where it is required, it is going to stymie your growth of GDP. So the extension of credit to different parts of economy and the way it works, i.e. how are you going to measure credit risk of an individual when you're lending into them, I think those will play a very important part, because ultimately the Prime Minister is not going to deliver GDP growth from sitting in his office. It has to be delivered by individuals and companies, and which means enterprise have to work and they have to have access to capital at a reasonable rate. Now, RBI has done a good job of controlling inflation, and thankfully, the oil prices have helped as well.
Yes.
But ultimately, the things have to be delivered on the ground through businesses and individuals. No Prime Minister and no cabinet can deliver GDP growth. It has to come from enterprising people, enterprising institutions, and they just have to set the framework.
That's right. But they need that kind of infrastructure to kind of grow. They need policies that will help them thrive. And that is something that they're looking to the next government for. There's no question about that. Subra, when you look at the kind of sectoral play that there is right now with the future in mind, you did touch upon the possibilities, but where do you see the maximum play? The consumption story is something that we are always talking about. Do you think that's going to be the lasting story? If at all, then how do you play into that? If it's going to be continuing financials, then how do you play into that next, considering the run-up that we've seen already?
Vikram, one thing, Manish has not been tracking the Indian elections. He wouldn't have heard of Sam Pitroda. Thanks to Sam Pitroda, inheritance tax and wealth tax is not coming, not till 2029 elections.
I was about to consider that as well in asking you the question, because inheritance tax is definitely one thing that we can assume will not be part of the next government if Mr. Modi is back.
Correct. Not for another 5 years. So yes, what can we play? Definitely infrastructure. Like Manish said, you cannot have enough of it, right? Right now, if you go and stand in the airport, they're crowded. big Indian airports are now crowded. So the number of planes taking off, the number of aircrafts, number of pilots, it's huge. So infrastructure will be there. Automobile should do well. The banking has not really done well much in the last 2-3 years, so that could take off. So largely infra, the PSU I think may have hit a high, but yes, banking will do well because, like Manish said, money has to go to the smallest guy. So your credit rating companies will do well. There'll be a lot of fundraising, not just from banks, right? Not IPOs, but your issues of debt instruments will happen. Banks don't have enough money to lend if in manufacturing takes off in a big way. So yes, lending, I also mean fundraising. So NBFCs, banks should be doing well. Uh, Tourism is likely to do well. When people have a feel-good factor, they travel more. So if you take the hotel stocks, the travel stocks, they're all doing well. I don't think any one particular sector has not done well. So maybe the FMCG, etc., have not done well in the last few months. But largely everything has done well. So overall, I would rather be bullish on the index rather than looking just at manufacturing or BFSI or any pharma or any such space. Just look at the overall index. There is going to be a boom. The infrastructure, like big electric transformers and all that, they will also be booming. So I don't see any specific reason to look at a particular industry. Overall, there will be buoyancy in the market, no doubt about that.
Correct. But Manish, you did mention stretched valuations. Where is that most evident? Are there sectors that you would most likely avoid looking at the kind of valuations that exist in the Indian equities, especially when you compare them to the options that investors have, even when you look at foreign investors and the options they have today?
Single stock. So I can't talk about single stock.
No, not really. I'm talking about sectors.
Yeah. But I meant in terms of when you compare vis-a-vis other economies, in the emerging market.
Yes.
So there the valuation looks extremely high. But it has been that high for some time. And for the reason is that people do expect that the Indian GDP growth at, let's say, 6 to 8% is going to continue, and it will benefit from everything else that's happening around and the problems that China has. So I think that is the base case where people are looking at. And also, if you're unable to invest in China, which is the case in many ways for dollar investors or foreign investors, then they see India as an economy big enough where there is still a huge runway in terms of growth that is going to come through. And they don't mind getting in at even higher valuation, because if you take a 3 to 5 year approach, then your high PE don't really look up to be that high PE in the long run. So that is the approach that everyone is taking. So again, I would not be able to comment on any specific sectors because I have not seen the PE recently. I talk in terms of the India market as a whole because of ETF allocation. But it has stayed expensive for some time. It may stay expensive. But I was just mentioning that if we are not able to drive that massive growth story that everyone is betting on, and that will clearly need revenue.
Right.
And from what you say, the inheritance tax is not coming, then I think the government has to prove that where these revenue numbers are going to come from, which will be the capital that will be required from the federal level to make these things happen. And that to me is a big question this time that people haven't looked at. Yeah.
Correct. So more privatization is something that you're also expecting, Subra, in response to what Manish is saying, that, revenues need to be high. They need to be sustained. We're looking at the revenues that are coming through GST, and those have kind of consistently stayed high. Do you think those are the kind of coffers that will be filled in times to come to drive the government's higher spending, or do you think private capex is going to come in a larger way now that you have policy continuity, if at all that comes through, looking at results tomorrow?
From 2024 is very different from 2014. The people are doing huge amounts of SIPs.
Right.
We have shown a fantastic appetite for picking up shares. If you don't sell your PSU shares now, when will you sell? Right. So some of the PSU shares have done so well. It's a fantastic time for the government to raise at least 50,000 crores by selling PSU shares. Yes, it's a fantastic opportunity. Will they do it? I think this budget is going to be very different from the past budgets. The government is going to think out of the box. Maybe there'll be a little more taxation. Maybe the interest rates will come down. Maybe there will be some PSU selling. Maybe PSU ETFs will come. We don't know. Narendra Modi is a very innovative person. So Narendra Modi plus the Nirmala Sitharaman will come with something pretty innovative, I'm sure. And there is enough FII money, etc., coming in. The Indian SIP figure is not small. So I think money will not be a constraint. And the world wants growth. Where will they go except to a market with 8% growth? So the FII money will go out, come in, all that will happen. But definitely when they see growth, they will chase, they will not mind the higher Ps. So
Correct.
I think money will not be a problem.
Right.
If people see an opportunity, they will come and invest. So
and the ease of being able to invest, Subra, for the Indian investor, the ease with which this can be done with the power of our phones today. You're looking at SEBI as well, now having revamped their app, and we are seeing that much more happening by way of insurance, or whether you look at everything that you can park your money in today. There are various ways of doing it as easily as the government is trying to make it through its various agencies. If that is the kind of possibility, then how do you think someone with a risk appetite should play these markets today, as opposed to someone like a personal finance expert like you would suggest? Be safe, like you're suggesting even today, that you don't need to play into the markets, time the markets, etc. But there are others who want to take risks. So how are these two strategies radically different in today's time?
Bikram, if you are a full-time professional and you like cricket, you play cricket for about 2 hours, 3 hours on a weekend, right? That's what you do. So most of your money, say 90% of your money, you put it into safe avenues like mutual funds, very well regulated by SEBI and very responsible 42 players, each one doing better than the other. Every 3 years, they're able to double their AUM without any risk or any accident so far. I mean, that's a fantastic track record. Nobody speaks about the fantastic safety track record of mutual funds. You will not get cheated. You will get your money in 3 days. There is transparency. There is audit. There are trustees. There is a board of directors. It's so safe. Why wouldn't you put 90% of your money here and 10% you have fun? That's okay. It's like a weekend kind of a thing. Do some trading in the market, yes, for you to have fun. But your money has to be protected. And I think mutual funds have so many schemes, maybe a flexi cap scheme or a multi cap scheme, so that you participate with a large cap, mid cap, everything. Don't go and specifically put into some manufacturing fund or a PFSI fund. You don't need it. Just some good big flexi cap funds should do the job for you, and just do an SIP. You get fantastic returns. I can find you so many mutual funds which are giving 15, 16, 18% kind of returns over the last 20 years. What more can you want?
Correct, absolutely. I mean, the options are way too many. And of course, maneuvering through these options sometimes becomes the task. But there's no taking away from the fact that if you want to play safe, there are options. And if you want to take risks, there are various options. It needs to be considered, and it needs to be tied into your financial goals as well, like Subra will tell you ad nauseum. Subra and Manish, thank you very much for joining us with your perspective on the current state of the markets. And of course, there are so many moving pieces, not least being counting day tomorrow. And we'll keep reconnecting so that you can help our viewers. Thanks indeed for joining us this evening.
Thank you.
If you like this video, then like, share and subscribe to ET Now.